All right, welcome back. Today we are diving headfirst into the one story that had the entire market, and I mean everyone, on the edge of their seats, NVIDIA's absolutely blockbuster earnings report and what it tells us about the future of AI. You know, for months now, the big question hanging over Wall Street, over Silicon Valley, over pretty much every investor has been simple but huge. Is this incredible run-up in AI stocks for real? Or are we just living in a massive bubble that's waiting to pop? Well, it turns out one single company's earnings report became the ultimate stress test for the entire AI revolution. And you guessed it, that company was NVIDIA. So here's our game plan. We're going to start with that bubble question that was on everyone's mind. Then we'll unpack NVIDIA's jaw-dropping numbers. We'll look under the hood at what's really driving this thing, hear from both the bulls and the bears, check out the road ahead, and finally, deliver a verdict, for now at least. Okay, so let's set the scene here. Before this report dropped, the hype was just undeniable. But so was the anxiety, right? You had investors looking at these sky-high valuations across the whole AI sector and starting to ask some really tough questions. Is any of this sustainable? Is it real? And all eyes, every single one, turned to NVIDIA. Their performance was going to be the test for the entire market's health. So did NVIDIA pass the test? Oh boy, did they. Let's get into the numbers that didn't just meet expectations, they absolutely shattered them. First up, the headline number, $57 billion. That's what NVIDIA reported in revenue for its third quarter. Now, to put that into perspective, the most optimistic, bullish analysts out there, they were hoping for maybe $55 billion. NVIDIA didn't just beat that, they blew right past it. And it's the sheer scale of the growth that is just so stunning. That $57 billion isn't just a record number. It represents a 62% increase from the exact same time last year. This isn't just growth, folks. This is hypergrowth on a massive scale. But here's where it gets kind of wild. They then forecasted $65 billion for the next quarter. That would be 65% year-over-year growth. So what's the key takeaway here? The rocket ship isn't slowing down, it's actually speeding up. So, where is all this money coming from? Well, if you look inside the numbers, the story becomes crystal clear. Yeah, gaming and the other segments are doing great, but the data center, it's in a completely different universe. At over $51 billion, up 66%, it is the undisputed powerhouse driving this entire company forward. Okay, so that covers the what. Now for the really interesting part. Let's peel back the layers and really understand the why behind these just unbelievable numbers. I mean, just look at this. It really is all about the data center. This one segment, fueled by the insane demand for their AI chips, now makes up a staggering 90% of the company's total revenue. Think about that. The entire AI revolution is literally being built on their silicon. And hey, you don't have to take my word for it. CEO Jensen Huang said it perfectly. Blackwell sales are off the charts, and cloud GPUs are sold out. We've entered the virtuous cycle of AI. What he's saying is there's just this insatiable, never-ending demand from the biggest cloud companies on the planet. They're all in a race to build out their AI infrastructure, and NVIDIA is selling them the shovels. But here's the thing. NVIDIA's advantage isn't just about making the fastest hardware. The real key to their dominance, their economic moat, is something else entirely. It's their proprietary software platform called CUDA. Think of it as the operating system for their GPUs. The entire industry has built tools and libraries on top of it, which means the cost and hassle of switching to a competitor is just incredibly high. The software essentially locks everyone into their hardware. It's brilliant. All right, so with numbers like these, you'd think everyone would be on board, right? Well, not so fast. This brings us to the ongoing debate, because there are still two very different ways to look at NVIDIA's future. So on one side, you've got the bulls. They're saying the AI infrastructure opportunity is just astronomical. We're talking $3 to $4 trillion a year by 2030, and that NVIDIA's dominance with its chips and its CUDA software is basically unshakable. Then you have the bears, and they raise some pretty valid points. What if the handful of giant tech companies buying all these chips decide to build their own? And is the return on investment for all this AI spending actually proven yet? And of course, you can't ignore geopolitical risks like restrictions on selling to huge markets like China. And that brings us to the road ahead. Because if you thought NVIDIA's recent results were ambitious, just wait until you see what they have planned for the future. So this reveals a massive shift in their strategy. NVIDIA is moving to a super fast, one-year product cycle, a new major chip architecture every single year. From Blackwell to Rubin to Rubin Ultra and then Feynman, it's just a relentless, crushing pace of innovation that used to be considered impossible in the chip industry. It's clearly designed to keep any competitor permanently trying to catch up.
On this roadmap, it isn't just for show. Management has come out and said they have visibility on $500 billion in cumulative revenue just from Blackwell and the upcoming Rubin chips through the end of 2026. That's 5 times the lifetime revenue of their last blockbuster chip family. Just, wow.
Okay, and this is where the numbers start to sound like they're from a science fiction movie. Based on this roadmap and what we expect big tech to spend, some analysts are now floating a potential market cap for NVIDIA of $20 trillion by 2030.
So let's bring it all home. After looking at the insane numbers, the core technology, and that aggressive future roadmap, what's the big takeaway from all this? Well, for now, the verdict seems pretty clear. The AI boom is not a bubble, at least not yet. The demand from the world's biggest and smartest companies is very real. The growth is actually accelerating, and NVIDIA's roadmap is built to keep them years ahead of anyone who tries to challenge them. But all of this phenomenal growth brings up a new and maybe even bigger question for the future. Right now, the bottleneck isn't demand, it's supply. So as this AI build-out scales from thousands of GPUs to millions of them, can the world's energy grids, its supply chains, and the physical data centers themselves, can they actually keep up? That might just be the real test that lies ahead.